So, good morning to everyone who are seeing this video. Hey, why are you laughing? Don't laugh. Okay. So, today we are going to talk about money and credit system. So, what is money? Money is anything for which we can exchange our goods. Hey, don't laugh, I said, fools. Shut. Money is anything which we can use to exchange the goods for the value which it provides for. For example, hey boy, hey Venu, come in the way. For example, see this boy. If I want to buy him, for example, his value is 20 rupees, but it is not, it's just 5 rupees, but still, if his value is 20 rupees, and I have 20 rupees note, I can give that value, give that amount of money to the respective owner who owns this guy, and I can buy him for 20 rupees and do whatever I want. That is money. The reason why transaction is made in money, because if we have money, we can exchange it for the services or the commodities we have. With the goods, we can exchange it for. If we have the money which we have in our hand, it's called as liquid cash. So that we can have it as physically. If it's damaged, it cannot be replaceable, because even a single piece of paper of money, even if it's 10, 20, 100, 500 or 1000 is banned. What to do? Modi, leave it's okay. 2000, everything can be exchanged to buy the values to the exact commodity we are searching for. The rest all are given in the notes. You can refer to it. So now the topic is double coincidence of bonds. It generally happens and is an essential and the most important feature in a barter system. We all know what barter system is. The exchange of goods, also with the expectation of what the good the receiver and the buyer want to exchange. It has to be met, and that's why it also failed, the barter system, because every time what the receiver wants, the buyer doesn't. Whatever the buyer wants to expect, the receiver doesn't. So for example, I will show what the double coincidence of wants is. Come here, bloody bugger, come. What is, for example, if I want this piece of this earphone, if I want to buy it, you want to sell it? Hey, I mean, you are in barter system, you will sell it, right?
Yes.
Okay. Then, for example, you are, for example, he's a guy, he wants to sell this headphones. In the way of double coincidence of wants feature including barter system, what he will do?
I want your liver.
Hey, sorry. Hey, let it be. Means he will not have my liver. Listen. So what he will do? He will have a coincidence of what he will have. He will search for a guy who he has to replace it with this gada. So if I give you this, you can get. So your want is also finished. My want is also finished. So both are satisfied. Happy. Same puppy same. So now we'll talk about RBI. RBI, we all know what it is. Reserve Bank of India. जानकार रहिए, सतर्क रहिए. That KL Rahul had. So what is RBI and what is its features? We'll talk about. Simple, the definition of RBI, not the definition. What RBI does? RBI, it's the RBI. Ignore this fool. It's okay. Yeah, Corona. RBI. It is the main sector. It's the main central bank, which. What is it? It's the main central bank which looks over the monetary system of India. That is the finance and everything. It controls the formal sector banks like the State Bank of India, IOB, Axis Bank, ICICI Bank, that Amitabh Bachchan wala bank, and every bank. It controls the formal sector banks. The informal sectors like the money lenders they give in the village, it does not have any control over there. The formal sectors, which are run by formal authorities of the formal companies run by the authorities, it has a check on those ones. And subsequently and periodically these formal sector banks have to report to the RBI on whom they have given the loan, on how much interest rate they are giving the loan, how much have they borrowed, how much they are giving, and the RBI has a check over these, so that it could be subsequently have a balance on both lending and borrowing. That is the work of RBI generally. So we'll talk about what is collateral. Collateral is any asset that the borrower owns. For example, any land, vehicle, house, building, livestock, or anything which he owns, so that he can provide it as a guarantee to the money lender, to the lender who to whom he is asking the loan or the amount of money which he is asking for, as a guarantee to the value of amount which he is asking. For example, he is asking 60,000 loan, then 60,000 vehicle should be provided as a collateral to him. If he is providing any 5 lakh, if he is asking any 5 lakh rupees loan, then he has to provide any collateral which has an exact value or some like a between mixed value of 5 lakhs, more than or less than. It should be around. So like that, it is generally most required in collateral. It is like a guarantee between the money lender and the borrower. It always works as a guarantee, and it has a healthy relationship. It acts between them. And generally collateral does not work on common terms like in families, where if we ask my brother to give me 2,000, he won't ask me any collateral. Okay, then give me anything which has a value of 2,000 and I'll give you. It doesn't work in the informal sector. But in the formal sector, when you go to the higher authorities, higher level, you have to provide any guarantee that if you're not unable to repay the loan, the collateral will be used as, it would be taken into the lenders. It would be owned as the lender. The lender would own the collateral, and you would lose the value, the money, and everything. Talk about what are the terms of credit. So number one, interest rate. The interest rate depends on the lender. It can be mutually communicated and can be asked between the lender and the borrower on how much interest rate they are providing. It can be mutually shared and can be like discussed and have a healthy discussion, and then flash one and have at last have a perfect and a final interest rate. Number two is the documentation requirement. Like the collateral, it's like collateral, but it requires the paperwork, the signing that you have to repay the loan on this specific time, or else this would be confiscated, or this or that, everything. That is the documentation requirement. Collateral, as I already mentioned, the value of the amount should be as equal as the asset which you are providing as a guarantee for the loan which you are taking. And the mode of repayment, the how you are repaying the loan. For example, if you are taking as a liquid cash, how you are repaying it as a GPay amount or the bank transfer and everything. That's the mode of repayment, how you want to repay it through the cash, or you want to repay it through an asset which has the same value of the loan which you have taken. So these are the four. It would also be provided in the next slide. So now we'll talk about the two types of that money and credit which happens in the economy and society: the formal sector and the informal sector. Formal sector, we all know how the money is being provided, borrowed, lended, and then repaid and taken and everything. We all know the process. Like, it has to be credentially applied, it has to be accepted by the government according to the rules and the government and the budget which they are using, which they have applied on according to the law, the RBI law. The banks have to follow the RBI law and everything. So there cannot be any unfair means. It can never be used. No unfair means can be used in the formal sector of providing the borrowing and lending. Examples are these: Axis Bank, ICICI, Amitabh Bachchan Bank, and that SBI Bank and everything, as I mentioned. And now we'll come to the informal sector. Informal sector, what are the people who come under the informal sector? Employers, traders, financiers, and like the money lenders in the villages and everything. They can charge how many interest they want. They can charge at most the high level interest, sky level interest, or no interest at all. And there can be so many unfair means used to get back what their money, what they have lended to you. For example, if you're not unable to repay their loan, they can use at most any form of unfair means to get their money back. But it doesn't happen in the formal sector, because there is a documentation that I have said the terms of credit. It is followed only in the formal sector, but in the informal sector nothing is used, and the government or the RBI don't have any credit, or they cannot have a check on those. They cannot control or have a rule on those, and to stop these unfair means, or they cannot have any control over these sectors. So it is better, I would say, never take a loan. But if you are taking a loan, never believe on these informal sectors. Even if your friends and family and relatives, after giving you the money, they can show who they really are. So generally take the formal sectors, at least, but my opinion is never take a loan. formal sector, informal sector. These two are there.